returns to land and property tax appraisals. Next, we're going to talk a little bit about how the landlord net income is calculated for property tax considerations. One of the things to realize that it is very much statute driven. And so there are statutes in the state of Kansas that indicate what is to be included, the data to be used, and how that process ends up working. We'll also talk about what is happening in terms of the current situation, kind of looking back over the last couple, 3 years, kind of give you indications of where the landlord net income is as we look at it. And then the last thing we're going to look at is how long before property tax appraisals turn. In terms of that, what point will we begin to see that landlord net income number and ultimately the property taxes once they're capitalized using the state determined capitalization rate, when that will begin to turn. What I have displayed here is essentially the Barton County, and I'm going to use Barton County as kind of the case study. It's kind of right in the center of Kansas. One of the things I think that's important to realize is the situation is roughly the same across the state. But if we look at this, I've borrowed information from Michael Taylor, and she ends up looking at the estimated cash rent. She calculates these each spring, looking at what the expected returns are going to be, the expected expenses, and then backing that out and coming up with an equitable lease from a landlord type perspective. One of the things you'll end up seeing is given the information that she's calculated for the years 2013 through 2018, you can see that there's certainly a downward trend in those numbers. In terms of 2013, 2014, the profitability was much higher in the sector than we're looking at now. If we then go to the next slide, essentially the landlord net income that is used to calculate property taxes, it's kind of the numerator of the process. For Barton County, those have been increasing over time. In terms of in 2013, the number was 2945. It increased to 3259, 3616, 3991, 4339, and then the number for 2018 is 4589. And so if you look at this, there's kind of a paradox going on in terms of essentially the profitability of the agricultural sector is going down, while at the same time the property tax computation in terms of the landlord net income is going up. And certainly that creates difficulties for producers, for landowners, essentially seeing their property taxes go up while at the same time they're seeing their own income, if they're the landowner and the farmer, or if they're just a landlord, they end up visiting with the producers, and the producers are trying to move those cash rents down or share leases to essentially reflect the profitability of the sector. But yet at the same time, property tax calculations and computations are going the other way. In terms of how is this landlord net income defined? It's defined by statute as the 8-year average of an 8-year average of the returns to the landlord. And so for each county at the non-irrigated level, there is a computation that is made that takes the prices times the yields and then subtracts off the costs associated with the landlord. We end up doing this on a share basis, and so we end up using a typical share for those individual counties in order to compute what that return to the landlord is. That 8-year average is then going to be capitalized at the state-defined capitalization rate. Currently, that's right around 15%. And so that capitalization rate has not changed too much. But again, that is defined in the statute with regards to what that capitalization rate is. In terms of the numbers that we end up using to compute for dry land or non-irrigated land, we do end up trying to get as much county information as possible. The process is set up such that everything is publicly available data. And so we're using data from NASS, USDA NASS, and other surveys. Any of the surveys that the department does to compute property taxes, those are available on the web, such that everything is very transparent, hopefully, in terms of how those numbers are calculated. With regards to irrigated land and pasture land, those are calculated a little bit differently in terms of the irrigated land is calculated more on a regional basis. And so we end up calculating those on the regional basis. And then pasture land is also on the regional basis, but the statute defines that cash rent is used to do that computation for pasture. Those numbers, those landlord net incomes, I'll probably refer to them as LNIs. Those are then sent to the property valuation division. The property valuation division then will adjust those to account for differences in the quality of land. And so there's some productivity indices that have been established that kind of takes into account soil conditions and average rainfall conditions to come up with a soil productivity index. And so the non-irrigated land and pasture land will be adjusted from that either district or county LNI up or down to take into account the different quality of land. For the irrigated land, the same type of thing will occur. The other thing, though, that occurs with irrigated land is there is an adjustment for the depth to water. And so if the well is 100 foot deep, that amount, the pumping cost there will be less than if it was 500 feet. And so there is an adjustment made to those LNIs to take into account the pumping cost. And so that's basically the process that goes. But the key thing I think that's very important and to maybe help explain kind of why we're in this paradox right now is that the process places a weight on the middle years of the process. And so right now we're looking at individual values that make up the 2018 numbers that came out recently. Those are made up of individual years from 2002 to 2016. And so again, that 2018 number is made up of the last 15 years of returns. Once the 2017 numbers are out, that'll update from 2002 to 2016. It'll update from 2003 to 2017. The goal of this smoothing process is to remove the variability of year-to-year changes. And from a yield perspective, there was some research done by the department here that looked at different ways of doing the yield smoothing just to essentially eliminate year-to-year variability. The last thing, if you're in a local government or a school district, you don't want agricultural land values probably bouncing up and down with the normal variability in crop yields that we experience in Kansas, simply because that very much makes it difficult to plan for future years. And so that's kind of why this 8-year average was adopted, just to remove that variability from year to year. This next slide, I think, will give you an indication of just the weighting structure for the 2018 property tax computations. And so the 8-year average basically places the most weight on the middle year of that 2002 to 2016 stream. And so that ends up being 2009 has the most weight in the formula. 2009 right now is carrying a 1/8 weight, or 12.5% of the value. And then if you look at 2008, 2010, those values are right at about 11%. Then if you look at 2012 and 2008, those are 11. And so that continues to decrease, such that the 2016 and 2002 years have a weight of about 1.6%. And so the idea is that the years that are coming in and coming off basically have less weight, such that that drop-off year and coming in year do not have major weights. And so this is kind of how the information is weighted. And so if you think about this a little bit, 2009, the profitability in 2009 was much different than what we've seen in 2016, 2017, 2018. And so in some respects, the fact that 2009 is the middle weight there certainly has some implications. This here kind of gives the individual years from 1998 all the way through 2016. And so this would be the individual landlord net income for each individual year for Barton County. In terms of looking at this, you can see from 1998 all the way through 2006, those landlord net incomes were hovering between about $22 and $30 per acre. 2006 to 2007, they went from 30 to 32. Then we hit the high profit years beginning in 2008, when that jumped per acre from 32 to about 72. That then decreased gradually, or maybe not so gradually, but decreased from 2008 to 2012, where that number went from 72 down to 40. Then we hit 2012, it went from 40 to right at about 76, 77, 78. And then after 2013, it fell off fairly rapidly in 2014 to about 48. And then it continued to fall down to 37 in 2015 and 2210 in 2016. If you look at the average over this period was $42 in terms of your landlord net income. The average was $42 on a 15-year average, and the maximum was 73.23 that occurred in 2000, or actually the maximum was 75.88 that occurred in 2013. And the minimum was in 2210 that occurred in 2016. And so using these individual years, and I do have more than 15 years here simply because I want to illustrate this, but essentially if we begin to look at this, the weight when we calculate the 2014 values, you can end up seeing that purple triangle that is over there. You can end up seeing that the major weight was in 2005 at that point in time. And if we look back to 2005, we end up seeing a return of about 2239. And so that was the value that was getting the major weight. You can see that some of the high profitability years of 2008 certainly were having some weight, but they weren't getting the major weight. Then we end up looking at 2015, the next year. You can end up seeing that that formula is moving there. We're getting more and more weight on the high numbers in terms of in the 2015 property tax values. The maximum came in at a weight of 1/64th. And so the 75-88 carries a 1.6% weight. Then we move to 2016. You can see we're getting closer to having the major weight on that high number in 2008. And you can again see that those high income years are coming in and carrying more and more weight. The numbers in 2017, basically the biggest value there was the number in 2008, which was 73.23. And so that number now is going to get less and less weight as we move forward. However, if you look at the 75.88, that number is going to continue to get more weight as we move forward. And then when we look at the years that made up the 2018 property tax LNIs, essentially the one with the most weight was year 2009, which was 61.49 with regards to the LNI. And so you can see that the first big peak is starting to carry less weight, but you can see that 2013, another high year, is continuing to increase weight. And so just from looking at this, you can end up seeing now that there might be a reason that land values, the LNIs, will begin to stabilize simply because we're kind of in those two peaks where one of the high values is getting less weight, the other one is still getting more weight. And so until we get 2013 on the other side of this weighting scheme, the values are not probably going to move a lot. One of the things that you would wonder, well, is Barton County representative of what's going on in Kansas? In some respects it is, such that the profitability in 2008 and 2013 from a crop perspective was a price effect. And this was fairly widespread across Kansas. And so even though I'm looking at Barton County, if you're kind of thinking, well, I'm in Southeast or I'm in Northwest, and so Barton County isn't that representative, the shapes of these, the net incomes, the individual net incomes, are fairly similar across the state, simply because the high profit was certainly due to yields, but the bigger effect was basically just high prices for corn, wheat, soybeans, sorghum, the major crops that we end up producing. And so what this ends up doing is I've graphed this in terms of the LNI, the average LNI that is used to set property taxes. And then for example, in 2013, that number was 29.45. And so if you had more productive land, your number would be more than 29.45 based on that productivity. If you had less productive land in Barton County, your values would be lower in terms of that LNI. You can end up seeing that increase from 29.45 to 32.59 to 36.16. 39.91, 43.39, up to 45.89. And if you look at the percentages, you can see that there's been fairly high percentage changes there in terms of, we had 3 years where the LNIs went up between 10 and 11%. From 2016 to 2017, it was right at 9%. And then from 2017 to 2018, it was 5.8%. And so we are seeing the fact that that 2008 and 2013, that those years are beginning to have less effect. And the fact that we now are placing less weight on 2008, we're going to see some leveling. And I will actually address that coming up here in a couple slides. The other thing that I wanted to do is just give you some indications there with regards to what's going on statewide. And so we're seeing roughly the same thing going on statewide. What I've done is picked out a county in each of the crop reporting districts from Barton to center, the central district, south central, north central. Then we end up kind of going around the state in terms of the southwest, northwest. The numbers in red there, the percentages, are what the change is from year to year. You can see that Marshall had pretty high changes in 16, 17. In terms of Jewel, pretty high changes from also from 16 to 17, and so fairly high percentage changes there across the state. If you look at the percentage change from 17 to 18, you do see that those are lower. And again, part of that is the fact that we're beginning to move that 2008 highly profitable year for less and less weight. And so we can also look at native pasture, and the Southwest, the computation there isn't there, but you can kind of see what those LNIs are for the different regions across the state. You can see the percentages. Certainly in the western districts, one of the things you'll end up seeing is those are fairly high percentages, but the values are relatively small. And again, these are based off of the 8-year average of cash rents for cropland. And so you can end up seeing the difference in those amounts across the state, and you can also end up seeing how they've changed over the last 3 years. And then the last one I've done is the irrigated, and I've put the depth of well that I'm using here in terms of I'm using a 300-foot well for northwest, west central, southwest, and then a 100-foot well for north central, central, and south central. Again, you can end up seeing the percentages. Again, the profitability of 2008 and 2013 are certainly driving those LNIs per acre. You can also see, though, that from 17 to 18, that number did back off a little bit with regards to what's going on. And so that kind of leads into the question in terms of just where are we going to be and how long are we going to see this paradox where agricultural land returns are low, and they've been declining generally, but the property tax computation is going up. And so what I've done here is I've ended up just basically running this forward from 2018 all the way out for 10 years. And what I ended up doing is I ended up choosing different levels there with regards to what's going on. And so, for example, the purple number there, what I'm doing there is I'm assuming that the returns from 2017, 18, 19, 20 on remain at 2210, and so we remain at that low level. Then I've increased that by $5, and so I'm assuming a constant return at 2710. I'm assuming a constant return at 3210, a constant return at 3710, and then a constant return at 4210, which is kind of the average. And so I'm just assuming that the world is kind of constant after 2017 with regards to the landlord net incomes. I know that that isn't the case, but I think it's important to kind of look at just where we might end up going and how that's going to end up affecting the LNIs. One of the things you can see from this graph is that from 2018 essentially forward, we're getting to a point where those LNIs are going to level off. And in fact, depending on what the future is, by 2021 to 2022, those numbers are going to begin to fall. And certainly the profitability, or how profitable Kansas agriculture is in 2018, 2019, are going to affect in terms of which one of these lines we may be on, whether or not we're on the yellow one where we get back to higher profitability, or whether we remain kind of where we are now with lower profitability at 2210. But one of the things that I think is fairly important to note is we are getting to a situation where we should not see continuing increases with regards to the LNIs. And that also means that we should begin to see a stabilization of the assessed value on agricultural land. In terms of looking at this, to give some numbers, the 15-year average of the LNIs in Barton County is 42. The 15-year minimum was in 2016, which was 2210. Again, when I'm doing these, I'm assuming that these things hit this value and remain there. The key thing is I've done this for more pessimistic scenarios, such that we go all the way to 710 per acre, which I hope we don't see. And then I have more optimistic scenarios where we get back to the average. One of the things you can end up seeing is, depending on the returns, we're either going to see a turning point in 2019 or 2020. And so what that means is that 2019 or 2020 are likely to be the peak of these numbers, unless profitability returns to much above average in the state of Kansas. In terms of how much, for example, would I expect at these different levels from where we are now into the peak? In terms of if we're in the situation where profitability returns, where we have 32, 37, 42, again, a little bit below the average, but fairly close to the average, we could see up to maybe a 3.5% increase in those LNIs. And so, again, we might see a little bit more increase, but over the next 2 years, not the level of increases that we've seen in the past. If our profitability remains kind of at the 2016 level, we're likely to see those values peak in 2019, and we would end up expecting to see something in the range of 2% with regards to that. Then the next thing looking at this is, let's look at what would happen in 2023 with these various returns. And so if I end up having a return of 2210, the turning point will be 2019, and essentially in 2023, the LNI would be about 11% less than it is in 2018. And so if I remain at low profitability, I would end up seeing a greater decrease over the next 5 years with regards to that. And so once I get past that turning point, I would begin to see a lessening of the LNIs and a lessening of the appraised value, assuming everything else in the formula is not adjusted by the Kansas legislature. If we would return to profitability, where we end up having higher profits, we would see less of a decrease in terms of, we would see about a 1%, but again, we would see the higher profitability on Kansas crop production agriculture. And so you can end up seeing that, given the fact that 2210 was the lowest on record, hopefully we're not going to go beyond that over the lowest on the last 15 years. Hopefully we're not going to fall below that. But essentially, looking at this, we'll end up seeing probably a drop over the next 5 years of less than 10% would be my estimation. And so once we get to that turning point, we may end up losing 2 to 3% on a yearly type basis. And so maybe to summarize where we are, in some respects, I think this paradox, at least of property tax appraisals going up, I think we're to the point where that is going to be less likely. I think we're going to enter a situation where these values are going to be relatively flat over the next 5 years or so. And again, all of this is predicated on the profitability, but given what the outlook is for crop production, we expect to return a little bit higher if you look at some of the out years, but not substantially higher, where we're going to see the $73, $75 per acre net return that we ended up seeing in 2008, 2013. And so again, I would suggest that probably if we're going to summarize these for the state of Kansas, over the next year or two, we're probably going to see these appraisals to increase, but probably less than a total of 5%, unless we get high profitability in Kansas agriculture, which I think would be a good thing in terms of the overall health of the agricultural economy. And that would cause those property taxes not to behave quite like they were. Same type of thing on irrigated land. Again, they're likely to increase another year or two. But again, those high profit years are beginning to carry less weight. And so we're also going to see a flattening of those. If you look at pasture, they're likely to remain fairly stable. And then finally, when landlord net incomes begin to fall, the decrease will likely be less than 10% through 2023. And so we will see some pullback of the LNIs and the appraiser of agricultural land, but it will be probably a relatively small. And so if we're looking for a 20 or 30% decrease in the values, you're going to have to get out more than 5 years for those to occur, just the way that formula is put together. And so hopefully that this provides you a little bit of indication of kind of what's going on with the property taxes. Again, I think it is important to realize that this is all statute determined. The 8-year average in the process is written in statute, also directed by the PVD director out of the Department of Revenue. And the formula is set up to be slow adjustment. And we're kind of in a situation where we had a rapid decline in profitability. At the same time, the property tax computations are in a situation where we have some high profit years that we're needing to work through the formula. And so again, as we look to the future, I think we're going to see kind of a period of leveling of that formula and beginning to see some decline in value depending on the profitability in terms of those property tax appraisals. And so with that, I will end up taking questions, and there are some questions there. And so let me get to the first one. The LNI does not take into account straight cash rents or flex rents. It's based off share leases. And so the way that that's established in the statute is that we end up taking a typical crop share lease. And so those will go from maybe a 40-60 or a 50-50 into the Northeast, all the way to a 1/3 as we move west. And so those are, the crop share percentages are adjusted based upon surveys. And it is all based off a share rent. And so it does not take into account the cash rents or flex rents. The only place that it does is it will take into account cash rents on the livestock side. And so pasture rents, and those are going to be straight cash rents, that is going to form the basis for the pasture. What is the current capitalization rate? It's right at 15%. And it does vary by region or county. And so there is also an adjustment for what the property tax levy is on each county. And so if you're in a high property tax levy, that capitalization rate is going to be higher than 15%. If it's in one that they're all going to be higher than 15%. The 15% is kind of in statute, and then there is an adjustment based on the property tax levy in each county. And so hopefully that helps, AJ. Is there documentation available that explains the data, the sources, the mathematical computations by the Department of Ag Econ on the behalf of PVD? There is, and I will have Rich post those documents on the website after the webinar. I think it'll be easier if we just post everything with the webinar together, and so we'll post links and or the actual documents with regards to how those are done. The way that the cap rate is it does not vary for pasture or cropland. They use the same cap rate by statute. But currently, right now, it's running about 15% before they make the adjustments. And then the next question is, does the LNI represent a statistical average that is statistical? Yes, it is a statistical average. What we end up doing when we calculate that average LNI, we end up taking into account all the productivity differences within the state, and we normalize that LNI such that the weighted average in that county on the non-irrigated land is equal to the average that we come up. And so these, for example, the 2210 that I talked in Barton County, when we calculated these on the different land quality in adjusting for the different soil quality characteristics within Barton County, we then renormalize that such that the average of the county ends up being the average, the weighted average. And so we do try to make sure that we end up looking at this. Have you conducted a verification and validation of your modeling against empirical data of actual LNI for a sample of individual tracts? Yeah, that verification that we end up doing is ending up basically making sure that all the tracts, when they're weighted within the county, ends up with the same LNI. And so the average LNI for dry land, as a put this across Barton County, is going to be that average. Hopefully that makes sense. It is important to realize that we do eliminate some things from LNIs by statute. For example, the statute doesn't allow us to put in government program payments. And so if you try to calculate it to what's actually going on, in some respects, it's not going to be the same, simply because not all income is calculated in that. Essentially, they're looking at the inherent profitability, and the way that that statute was defined is the thought was that government program payments, also crop insurance payments, were not part of the inherent profitability of the land. And so that was a decision by the legislature to exclude those. And so when you try to compare the LNIs to cash rent or any other market-based signal there, it becomes very difficult, simply because the thing was designed to take into account the inherent profitability of agriculture. And so any hunting or non-farm type income does not enter the calculation, nor does any of the government payments or crop insurance enter that computation. And so because of that, when you look at cash rent or something like that, except for the adjustment periods, the LNI is going to tend to be lower than the average cash rent for that county, or the average share return to a landowner for that county, simply because the way the statute's put together, in the fact that some of the income is excluded from the computations. As we were more profitable, those L&Is would approach more the cash rent. But if government program payments become more regular, or if crop insurance was included, you're going to see more of a difference between the L&Is calculated and what the actual return to a share lease would end up being. What about structures, fencing, ponds? Is there any adjustment for value of non-land value? With regards to that, in terms of, we're looking at bare land from the computation. On pasture, there is a deduction for fencing and ponds. And so on the pasture land, there is kind of a fencing allowance. And there's also a little bit of allowance in there for the water. It would roughly, in terms of the 15% cap rate, it would be divided. And so essentially you would take the L&I and divide it by the 0.15. But again, the 0.15 is kind of roughly the statute number. And then that number is going to be higher for the county you're in, as it takes into account the property tax that is levied on the land. Good questions. Hopefully I'm being clear, and if I'm not, come back with the question. One of the things hard is I can't read your faces. A lot of times when I lecture in public, I can read someone's face and see whether or not they are understanding or not, and that's kind of hard to do. So if I haven't answered your question, you won't offend me at all coming back and saying, can you re-explain that? So. In terms of, the median versus the average with regards to net productivity. In terms of, for example, and actually, the statute actually refers probably more to the mode than the median. In terms of the mode, basically, for example, when we're looking at crop share leases and when we do our survey information, it's kind of the typical, and how that's been interpreted over the years is most common. And so instead of using kind of an average on the crop share, so if there's some that come back as 50-50, others that are 40, 60, and then they have different expenses, what we end up doing is, based on the survey information, we take what's most typical for that county. In terms of, we do try to do what is most common from our survey information, and so we don't just use a specific average there. We do try to get that most common or typical. In terms of the median, is kind of hard to deal with, simply because from a statistical perspective, you don't have the full distribution, and so that midpoint ends up being pretty hard. And so the way that we interpret typical is kind of on the mode, and where this comes in to play is on the cost side, on the share rental type arrangements, where we end up trying to define what is typical. Other questions? Any other questions? If not, hopefully this has helped you understand in terms of where it is. In terms of some of the things that maybe a little bit of frustrating with regards to this is just the slowness in terms of how that moves. Again, not only do we use an 8-year average of yields, we use an 8-year average of an 8-year average of prices. Certainly, if you would use the actual prices instead of an 8-year average of the 8-year average of prices, the formula would adjust up and down quicker. And we may have had a situation with the high profitability where appraisals increased much faster and much higher than they did. But conversely, when we've been moving back into a lower profitability situation, they would have adjusted down quicker also. And so from a policy perspective, one of the things that the legislature has to think through is just how quickly they want these L&Is to move with the market, in terms of if they want them to move quicker than the market or more closely to the market. You could perhaps eliminate the 8-year average of the 8-year average of prices. But overall, in terms of I think it would affect the distribution of when these appraisals adjust. In terms of whether or not you use the 8-year average or just the actual price, you're still going to end up over the long term with roughly the same numbers. So again, it's just a policy decision that the legislature will end up making in terms of whether or not they want a slow adjustment process or whether or not they want a faster adjustment process. A faster adjustment process just means that as prices and profitability is high, you're going to see much higher increases in property tax values. And when it's declining, you're going to see a faster decline as opposed to a more gradual. My wife owns land. She's from Nebraska, owns land in Nebraska. And in terms of certainly their system has much higher property tax burden than what we see in Kansas. And so it's just one of the things that the legislature has to think through in terms of just how they want to assess agricultural land. With that, I think we will end today. And so have a good rest of the day and good rest of the week. And one of the things, kind of speaking from the department's head, if there are things that you would want webinars on, just send either myself or Rich Llewellyn an email in terms of we're certainly wanting to address issues that you think are important. And so as you have, for example, potential topics that you would like faculty in the department to address, just feel free to send us an email. And if there is enough interest, and if we do have the expertise in the department to address those issues, we would be more than willing to do other types of webinars. So with that, have a good weekend. Yes, Rich.
Alan, there's one more question that came in. How about not using the high and low values?
Throwing out the high and low? Good question. That might be something that we could take a look at. We really haven't done anything in terms of how that's done. And so that would be something perhaps we could take a look at. Off the top of my head, I don't think that it would affect anything too much. If we would have eliminated the high number, it probably would have turned a little quicker. The issue here is we ended up with two high numbers, and so that is going to delay this thing from moving very quickly. But That is something I think would have to do a little bit more research to think through how that would end up affecting it.
All right. Well, thanks very much, Alan, and thanks to all of you who were on. We appreciate you being here. And if you have questions, the slides are already posted. The webinar recording will be posted later this afternoon, and I'll send the link to you all. Thanks again.